Hello and welcome to Crux Investor. We caught up earlier today with Tamara Brown. She's the interim CEO at Superior Gold, TSX listed producer with assets in Australia. We talked to her about the turnaround that she's been overseeing, what she's focusing on in terms of the optimization of the underground component, and how soon we can expect to see the open pit solution actually contribute towards the valuation of this company. She's also interim, so perhaps a replacement on the horizon soon. I talked to her about the process for doing that and potential for a strategic partner coming in to help them move things forward at a quicker pace. If you want our thoughts and opinions on that conversation, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis. There are commentaries from experts from around the world on a variety of companies and commodities, including gold. We've got training courses on there to help you with your diligence process. We've also done summaries of interviews that we've done. In fact, all of our interviews, just to save you some time, because we know you're busy. And if you want to join a thriving community of investors sharing their thoughts and ideas with each other in a nice, safe and friendly environment, free from judgment, trolling and abuse, you can join them at cruxinvestor.com/club. I think you'll enjoy it. And we'd love your feedback too. So do give us a like. We appreciate it. You leave your comments below. We'll get back to absolutely everyone. And of course, if you want to see precisely what we talked about with Tamara today, do take a look in the description below. Tamara, how are you?
Hi, Matt. I'm well, thank you. How are you this morning?
I am magnificent. It's a nice spring day outside. The daffodils are out. Temperature's changed.
There's hope in the air. It's all good.
I'm feeling good. So where are you?
I've just returned from Perth, so I'm in Toronto. So I've just come out of my requisite 2 weeks of quarantine. But I had a great 2.5 months down in Perth with the asset and the people there, and it's been great. And it's a good time to speak with you.
Do you know you sound more Australian than last time?
my husband tells me that, and I do pick up the lingo and say g'day a little too much.
I'm like that with a pint of Guinness. Right. Well, look, we better catch up and hear the story, because we didn't catch up that long ago, but you've done a few things and we were intrigued by that because I really enjoyed the last conversation. So why don't we kick off? Give us a 1 minute overview for people new to the story, and I'll pick it up from there.
Sure. So for anyone new to Superior Gold, we're a TSX-V listed gold producer. We have an asset in Western Australia, right in the heart of the Western Australian goldfields. It's called Plutonic, and we own 100% of it. It's an operating gold mine that has been producing gold now for over 30 years. It's produced in and around 6 million ounces of gold. So I like to say to people, we have the right rocks. The gold system is deep and it's high grade, and this is what shareholders buy when they buy Superior Gold stock. With that big gold deposit, we have all the infrastructure that's associated with it. It used to be owned by Barrick Gold, so a senior gold producer. And in the days that they ran it, it was running in and around 330,000 ounces of gold a year of production. And so with buying Superior, we get all of that infrastructure, all of that world-class gold system. And it's our job to unlock that and leverage the upside opportunity for shareholders. So we presented to you in January, and we've just been adding and incrementally improving the operation since then.
Well, let's talk about that. So I think for people who want to get into the weeds of this project, this company and the project, I'll put a link to the previous interview there, because we got into some detail with regards to the business plan, the strategy, and how you were hoping to turn things around. So I won't focus on that today, but needless to say, you've been parachuted in to turn the ship around, and that's the bit that I'm interested in terms of moving forward. So you've kind of got that historic production, you've got all of that infrastructure. There's a lot to like, but it came from a sort of, let's go low base, let's call it that, right? So yes. What are you doing? Let's talk about what you inherited and what you were charged with doing. Just a quick reminder on that before we focus on what we've done in the last quarter.
Sure. So when I came in, I don't think that the shareholders really understood what our strategy was supposed to be here. It was just a more general, we're trying to get bigger. But now I think that we've defined that strategy very well. So we've broken it into 4 pillars. So there's the underground operation that we need to optimize and ensure that it's at a steady rate of production in and around 70,000 to 80,000 ounces of gold a year. And then we have another side of the business that was previously just not focused on, which are our surface and open pit opportunities, Matt. So There's in and around 15 to 20,000 ounces a year of gold that can come out of each of any one of these pits that we have on our property. We already own the gold. We just haven't done the engineering around it to put a plan and a mine plan together and bring it into the production profile. So that's the second pillar. The third is that we have a second mill on the property that's currently on care and maintenance. And so we're looking with a lot of busy activity at all of the different deposits in and around Plutonic. So we would call this a belt consolidation opportunity because we own the infrastructure. It doesn't take a lot of capital to bring that second mill up into production. And that has a step change in our production profile by bringing in additional ore to the existing infrastructure that we already own. And then, of course, a lot of time and energy has been spent on the discovery side, which is, I'm happy to say, coming along very well because we now have a third drill rig that is completely dedicated to exploration drilling.
Right. Okay, brilliant. So a lot of moving parts as we'd expect and come from larger position historically. But is this just tinkering and polishing old assets, just trying to eke out the last remnants of value, or is there more opportunity ahead?
No, look, I look at Plutonic as really just starting its life, and what I base that on is the exploration results that we get. So when you're getting the kind of gold so close to infrastructure but outside of our existing resource base, and you're hitting it at a rate that we're hitting it at, Matt, we put out some drill results about 3 weeks ago where we drilled 7 holes. We got gold and significant gold on every hole. I don't see that in many assets out there. Generally, when you're exploration drilling, you're going to have quite a low hit ratio. So here at Plutonic, it's that gold system, that very prolific gold system that I'm excited to get out and start drilling, which we have not done for the previous 3 years, and that's because the company was capital constrained.
Right. Okay. So you feel there's more to this story. This thing still has legs. This isn't just about a dwindling and long tail of ever shrinking revenue. You think this thing has potential to do more, hence the exploration drill, I guess.
Yeah, absolutely. So and I am basing it on those results. So if we had started drilling and we weren't able to successfully identify where the gold extends, then I'd be sitting here in a very different position, talking to you probably about how we can optimize the rest of our remnant mining and how we need to talk about productivities, and which we will do. But that is not the only story here. That is a piece of it, and absolutely we have to optimize the existing reserve and resource base. But what I'm excited about is what tomorrow holds, which is the opening up of brand new mining fronts, which offer us the opportunity to get into virgin ore and mine them with best practices mining methods and improve our productivities, etc.
Okay, so if we look at the share price, the rot has stopped, but the boat has not yet turned. So what's the order of play for you, and what's the spend, and what's the focus in priority order to get that turnaround story moving?
Yeah, look, it's a good question. It's been a very tough gold market for all gold companies. Obviously, since we spoke to you, it's been challenged. I'm happy to say that Superior Gold's done better than most of its peers over this period. It's a declining gold environment, but I think people are starting to understand that this turnaround is starting to happen, and we're seeing that in a number of fronts. We're seeing that with quarter-over-quarter improvement in our mined grades in the stope at the stope level underground. We're seeing it with a steady flow of exploration results where we are hitting much higher grades than we're currently mining. And so I think people can see that with investment, with focus, and with good management, this asset has a long life ahead of it. And so they're now just starting to take a look at the Superior Gold story. And I would attest that we're just beginning that, Matt. So from here, it's a matter of delivering another good quarter, which we will come out with shortly. Obviously we're at the end of the quarter today, so I can't talk about results, but we are excited to continue on with what we've started in 2020 and actually amplify that in 2021, because we will be bringing in higher grade open pit ore for the first time this year. Last year we had no open pit material. So we're looking at an improving grade profile across the board, both in the underground and with the surface material.
I mean, that's interesting to me, because I think the previous management could have been accused of high grading, going after the good stuff and then leaving some poorer grades. And I think that was the beginning of the end for them. So, what I see in the most recent headline, some significantly high grades. We're looking at 21.8 grams over 8.3 meters. These are not chasing small veins. These are nice intervals. So I give you hope that there's more to come.
Yeah, absolutely. We're very excited about that exploration program. And so just to remind your viewers, at the end of last year, we did a financing, and that financing was on behalf of all of these things that we're doing now at the operation. So we've put that money to work for shareholders. So we've done things like revitalised our underground mining fleet. We've added 2 new trucks and 2 new loaders. So that's on behalf of improving our productivities, reducing our maintenance costs. We added that additional 3rd drill rig on the property that came on Plutonic in the middle of December. So we've really only had half of December's drilling. January, we're already be able to put out those drill results that you're talking about, Matt, which is very exciting. And I'm happy to say that we've just released another set of drills. So this is 2 sets of drill results that we've got now in the marketplace, and that's from a December 15 start. I think it's great, and this is just the beginning again. So now we have a lot of steady flow of exploration results coming towards us. This year we have also our surface projects, which is advancing the Hermes South project. We'll bring online the A4, Area 4 open pit in mid-year this year. We'll be advancing the main pit pushback, which we talked to you about last time. So all of the, yes, we're working very hard in the underground, but it's not the only area of our business, which historically it was in the last 2 years, 3 years. So now we're very focused on bringing in both the open pit and the underground so that we can fully utilise that infrastructure that we own.
Okay, so this is great. Can we just get into the weeds a little bit? So in terms of creating a sort of steady state of production from the underground, how much money are you allocating to that? I know you talked about some of the infrastructure, but what's the total number there required to kind of get that going at a level that's consistent where the market can go, that's fine, I don't need to worry about that? Because there have been a few different numbers put out there and certainly thrown back at us.
Sure. Look, so we only give 1 year guidance, and that's really because at this point of the turnaround, Matt, you actually don't know what you don't know what you don't know. So it's this drill rig that's bringing us new material, new mining fronts, literally every month, every quarter. And so our 2022 plan could look very different by the time we get to the budget in October, November than it does today. But happy to say in our 2021 guidance, we've provided sustaining capital guidance of around $4 million and non-sustaining capital of around $3 million. So $3 to $4 million. So let's say that's $8 million if we add those together of sustaining and non-sustaining capital. We are absolutely free cash flowing with this reinvestment that we're putting back into the operation. And the key to that is because mid-year this year, our gold loan comes off. So I think what a lot of investors haven't realised about Superior is it's been burdened with this very large rate of debt return over a short period of time. There was a gold loan, for better or worse, that was done at the end of 2019. So throughout 2020, we were paying back, we paid about $8 million US back into that gold loan on top of trying to invest in our operations. So this year we come free of that. It's a catalyst for the stock for sure, because I think the investment community will recognise that we are free cash flowing. I hope to actually prove to them we're free cash flowing before the mid-year cutoff of that payback. So if we can show that we're making a free cash flow while we're investing in the asset in Q1 and Q2, then I hope everyone understands that in Q3 and Q4, that free cash flow just starts to accelerate.
Right. And is that soon enough for you? Or do you need to look for a strategic partner, a big brother? Can you do this yourself?
We can do it ourselves, but there's always the opportunity to create more value with a larger player. So we have talked publicly about looking at all of the West Australian producers, for example, to see should Plutonic ever sit within a larger portfolio? Is that better? And so that's not something that we're closed to, Matt. We're open to it. And it just means that, but we're not stopping doing what we have to do, because anybody needs to do this. That is the investment in the operation, investment in exploration and drilling and development.
Okay, and I know you've been brought in to turn the ship around, but you've also been brought in to kind of make it look more attractive to, said strategic partner, whoever that may be. What are the sorts of things that you're focused on in that regard that is going to make you slightly more attractive?
It's no different than to any equity holder, Matt. So You just need to prove that you've got a future here. And so these are the things we're focused on. So we came out first with that main pit pushback, which gave us 6 years of 60,000 ounces a year of open pit material. That's on top of the underground. And now we're making sure, and it's a slower process of drilling off that underground, but where every single result we put out, we're showing, look, this is a new mining front outside of our existing operations, but within close proximity, so it's not high capex in order to bring it into our mine plan. So that's why we were looking on both sides of that. So we're looking at the open pit. We've done that with the main pit. Now we're looking at advancing the projects between now and when the main pit starts, and with the underground with that drilling.
Okay, and talk to me about the plant. Are you utilising it or no?
Oh no, not yet. So we have a 1.8 million tonne per annum primary processing facility that we probably utilise 1.6 to 1.7, and I think that with very little debottlenecking, we can get that operating in excess of the 1.8. So the study work that we did for the main pit pushback did utilise the full mill. And so with I think it was around $4 million Australian, we were able to increase the crushing capacity, which increased our capacity at the mill from 1.8 to 2 million tonnes a year. So we have a lot of room yet with the first primary processing facility, and the secondary one, which is the oxide mill, currently on care and maintenance. We have so many opportunities with that, Matt. Yes, absolutely. It could be a processing facility for the belt consolidation work we're doing. So I'm talking to in and around a dozen different parties that have gold resources that have no access to milling. And so it makes sense that they would want to talk to us because they're looking to get into production, whether they're juniors or whether they're copper producers that have gold deposits on their property. They don't want to be investing in a gold mill when we have one sitting there with capacity. So this is the exciting part of that second piece, which is that secondary mill. And then above and beyond that, one day, if for any reason, and I can't imagine this because there are so many people talking to us and eager to talk to us, but it's an asset that we're not currently utilising. So the company could also elect to sell it because there's a lot of demand for milling capacity in WA right now. And then you have, a piece of capital that you can put back into your operation, into one of your projects, etc. So that, again, just coming back to the fact that shareholders already own all of this infrastructure we have at Plutonic, and it's our job as management to unlock the value sitting there.
The type of strategic partner you choose is going to be important for you. Can you countenance getting involved with a junior company not yet in production? Would that make sense to you?
So a junior that's not yet in production, the kind of transaction you might see there, Matt, is something like a joint venture, an earn-in, farm-in, or an outright acquisition of one of their properties that gives them the capital to go ahead and advance one of their other properties, for example. So it wouldn't be the start. I wouldn't put that. It absolutely fits within the strategic review process because it's adding value for Plutonic and for Superior shareholders, but it isn't. It's just one small piece on the chessboard.
But for you, I'm just trying to think of where you've come from and where you've got it to today and where you want it to go. I'm just trying to build a picture in my head of the type of partner which would best suit you as far as the market is concerned. The certainty around the size or the cash holdings or the production capabilities of a company is going to be important to you. And your decision is going to say a lot to the market, and that's going to reflect in your share price, one would imagine. So I'm just trying to work out what you're thinking about, what you're discounting, and where you're going. Yeah,
look, there's no clear vision. No one ever knows what's happening with any strategic review processes. But I can say that anyone that we would look at as far as joining forces with would need to bring a heck of a lot of experience with respect to turning around underground operations. Because that is a key piece in the short term here. This underground mine here, it can go on for the next 30, 40 years with the right management and drilling and investment in it. And so you're not going to be going to a group that don't bring added value. But I also want to caution you, Matt, that the real value here is rolling up our sleeves and doing it ourselves. And so that is that. Adding in a couple of other assets, it increases our reserve base. It shows shareholders, oh, look, they've got a free cash flow plan that gets them towards that main pit pushback. We can see a funding plan in place so that Superior can fund it or majority fund that themselves. And then you're sitting here and you've turned this from an asset or from a company that had a 2 to 3 year mine life ahead of it to something that has a mine life in excess of 10 years. And that's the swing in valuation that we think we can deliver here for shareholders. It's very hard for an external party to pay us for that right now.
No,
they may choose to, but it is challenging. You usually get more from blood, sweat, and tears that you put in yourself.
No, I agree with that, but therein lies the challenge always for the CEO, interim or otherwise, that you've got the choice of doing it yourself. And I appreciate you've started the process. You can do that. That's great.
Yeah.
But you can also shortcut a process, avoid some of the sweat and tears, and find the right partner and get it done quicker. So both are good. They just have different pluses and minuses, right? And I'm just trying to get a sense of where you're at, because obviously you're Toronto. There's a TSX company with assets in Australia, which again leads me on to the nice question. I'm really good at segues. Yeah. Is the eternal question ASX listing at some point now that you're starting to sort of see a bit of chink of light?
Look, so the board's brought me in here to take a look at the value of what we have and put in place a plan, a strategy behind unlocking that value. And a part of that, I think, is looking at who is the right person to run the business going forward for the long term. And that's very likely going to be an experienced operator based in Perth. Obviously, we all live in a new world with COVID. There's quarantines, there's restrictions that there never used to be with respect to moving from one place to another. And I'm happy to say that work continues and is going very well. There's a lot of people interested in Plutonic because they see exactly what I've just outlined, which is with investment and with the right management, this can turn from being a 70,000 ounce producer to 150,000 ounce producer with not very much time. And so, because we have all of the infrastructure already in place. So I've got a lot of people that are very interested in that exact role. And now it's really our job as a board to say, okay, what do we do here for shareholders? What works best? And they're all catalyst opportunities. I don't have an operating background. I think that bringing that right name to the story is another opportunity and a catalyst for the stock.
Okay. Like I said earlier, so you stopped the rot. You're focusing on your 4 key areas. Let's just talk about area number 4, which is discovery. You've got this third drill turning. You also use the phrase belt consolidation. These are great words. These are great phrases. But again, how much money are you going to throw at that? What's the aim of it? What's the so what? Why are you doing it?
It's just about improving that life of mine profile for the company. And so with respect to how much money we're going to throw at it, I think that the better question is what return are you looking for shareholders? And so we have a very strict capital allocation program. And so any return is going to need to be in the high teens at least. And so we're looking for between 15 and 20% at a minimum for a project that we would look to add in. So whether we're adding something that has 200,000 ounces of gold in the ground and no plan to bring it out yet. And that may be, I wouldn't be looking at early stage things, Matt. I'm looking at advanced to development projects and I can tell you that, like I say, within 150 kilometres of Plutonic, there's 12 different deposits I'm already talking to that are looking for a milling option. And some of them are looking to exit, happy to sell. Some of the would be happy to do with a different structure, whether it's a joint venture or otherwise, or a mine gate agreement where we purchase that ore as it enters the mine gate. And so all of these things add to our cash flow, add to our production profile, and allow us, as we're building up our own inventory on site, because we're doing all of this in parallel. None of this is without the other. So we're going to be building our own production from the underground and from the open pits on our Plutonic property. But what we're saying is our infrastructure goes beyond that. We have more than enough availability for milling to go outside of our actual boundaries. And there's a lot of gold just on our border.
So when do you think you can actually capture some of this incremental revenue? Because you can have short-term agreements with these people, solves a problem for them in the short term, and that may turn into long term. Who knows? But will this be incremental revenue for you anytime soon?
Yeah, I think so. I think that the one benefit of the drop in the gold price is that there's a bit of a revaluation of expectations. Expectations are more in line with maybe what buyers would like to see. When the gold price is trajectorying up, it's usually a more challenging value discussion.
It can be. Okay, well, let's see what happens there. So timing, we'll know more when you know more. Got it. Company shape is changing. So is the board. You've brought on Damien Marantelli. Why? What's he bringing to the party?
Oh my gosh, he brings 30 plus years of operating experience in the mining space, and so it's not just gold. So he not only brings that industry experience, he's bringing that local Perth knowledge. So he's based in Perth, and it's an important part for us to ensure that we increase that local knowledge around the business. Toronto is an excellent exchange. A lot of our shareholders are here, Matt, but they all want us to have local knowledge as well. So Damien was an important part of that. And I would expect to see an increase in our executives that are based out of Perth, again, as a result of COVID and just having an improvement in being there close to the asset and executing on that belt consolidation piece, because, these individuals, vast majority of them are obviously located in Perth if they own these assets up in the middle of Western Australia.
Okay, so more change to come, and you'll let us know when that happens. Well, is that where? In fact, one last question. Well, there's always one last question with me. So what are we looking at? I get the fourth quarter results are coming out. I'm assuming more of the same. You're going to give me more of the same. But so therefore, what am I looking at into the near future with you guys?
Yeah, you're looking to see us improve quarter over quarter in our grades, improve quarter over quarter in our cash flow, and come out with some pretty stellar exploration results all across the property.
Right. So it's nothing crazy. It's just getting on with the business of running the business.
Yeah, absolutely. Improving the investment thesis here every day.
Tamara, appreciate the update. Stay in touch. Let us know how you get on. And are you heading back to Australia soon?
Yeah, so I would expect that I'll be going back in about 6 weeks.
Excellent. Okay, we'll speak soon.
Terrific. Thanks so much for having us, Matt.